In episode 364, we talk about the importance of cash flow and long-term investing. A lot of people get hung up on assets and what's the value of all of my assets. They rarely take enough time to focus on what's happening with the cash flow. Cash flow is so important, and when you're talking with financial planners, we know that, hey, if you're just starting out in life, cash flow is all that matters. If you are working on getting out of debt, cash flow is all that matters. If you are getting ready to retire, cash flow is all that matters. If you're just starting a business or you run a business, cash flow really matters. So cash flow is so important, but people just want to talk about assets. They want to talk about what the market's doing. They want to talk about whether, hey, should we be getting into some different investment, or should we be getting out of this thing now? Or I don't like the market, or I don't like the economy, or fill in the blank. So people get fidgety. They get impatient when it comes to investments. And I think part of that is because they can go online and look and see the value's up today, the value's down today, and they think that they have to make a decision, but they don't. They really don't. A lot of times we talk to folks about the S&P 500, and this is not a recommendation to buy or to sell the S&P 500, but I can tell you from experience, 10 years ago, we would point out to people that the current yield on the S&P 500 10 years ago, 2013, was 2.4%. And people were like, that's terrible. Why should I do that? There's certainly other things that I can find more yield on. So I wouldn't be buying the S&P 500. In fact, if you fast forward to today, the current yield on the S&P 500 is 1.4%. It's even less. And so people are like, that's silly. I would never do this. But again, let's focus on cash flow. Cash flow is so important. 10 years ago, the dividend on the S&P 500 was $34.90. Fast forward to today, the dividend alone at the end of 2022, so this is a year ago, was $68. So the dividend, just the cash flow alone, has doubled. What's happened to your investment in the same period of time? Well, in the start of 2013, the S&P 500 was at 1509. Go take a look and see what the S&P 500 is at today. We're recording this on the day that the S&P 500 is at 4,700. So if you're doing the math on the same day that we're recording, and I know that's not happening, your investment has tripled. Your $50,000 is now worth a lot more. It's worth $154,000. And if you were smart enough to say, I don't really need the cash flow, I'm just going to reinvest the dividends, your $50,000 is now worth about $184,000 today. Cash flow really matters, but people want to talk about assets, and I'm not sure why. That's the question we try to tackle here in episode 364. Thanks for tuning in.